Let's go. Welcome, everybody. Welcome, internet friends. I'm so happy to be here. I'm honored to have as guest FP from Socean Finance, a superstar builder team in Solana. They've launched their liquid staking. They're launching streams and many more products, making the difference in the Solana DeFi ecosystem. Welcome, FP. Thank you for being here.
Yeah, thank you very much for having me. I don't think I've ever received such an enthusiastic welcome, but yeah, thank you very much, Chris. Much appreciated.
Man, we've been working together for quite some time behind the scenes, and soon we'll be in a position to announce. We've already announced, but we're gonna showcase the amazing work the Socean team has been doing on the streams side of things.
Yeah, absolutely. Can't wait.
All right, but let's take everything from the beginning. Tell us a little bit about you, about your background. How did you get involved with crypto? End up in Solana. It's a layer too deep into the crypto world, and yeah, maybe a little bit about the team. After that,
Sure.
we'll proceed on the TLDR of Socean for those that came unprepared. But yeah, let's start from the basics and give me a little bit about your background.
Awesome. Sure. No problem. Yeah, so I was trained as an economist, and I have a particular interest in sort of mechanism design and game theory. But afterwards, I actually worked as a software engineer, where I was a full stack, web developer. But then after that, we co-founders and we sort of stumbled into Solana, into crypto, and then we started building. So how we got involved in crypto. In truth, we were not like super early. I know we of course in sort of techie circles we had heard of Ethereum and all this a long time ago, but we had never really seriously considered it. And it was, I think, late in 2020 that we decided to sort of pick up Solana because one of my co-founders read the code base. He was like, "Wow, I'm super bullish on Solana. It's super quick. I love the fact that it's written in Rust." And I was like, "I trust you. Let's let's build something on Solana." And so that's when it happened. We participated in a hackathon, and then but we didn't really have any ideas. But then afterwards, in sort of February 2021. We looked at the Solana grant, and one of the Solana grants, or something that Solana really needed, was a stake pool. And they were sort of asking for people.
Which hackathon did you participate? Which hackathon?
we didn't make a submission because we at that point we just had like so many ideas and we couldn't
get the Serum X DeFi hackathon in late January 2021.
I think either that or the one after that, but I'm not 100% sure. Yeah, I remember that was like when our interest was like really sort of like peaked, and then like we were looking at this space and it's like, wow, there's so much things we can do. What do we do? And then we sat on it for a while until we saw that sort of proposal grant from Solana, and that's where it all started, right? Yeah.
And that was the liquid staking grant.
Actually, it was a stake pool dashboard grant. They wanted to build a dashboard for stake pools, which they were sure were going to come very soon. But when we checked out the stake pool dashboard grants, we realized that there's no point building a dashboard if there are no stake pools that exist at the time. So we instead pivoted to helping Solana build that stake pool. So at that point, the stake pool program was in very, very early alpha. It was honestly not ready for prime time. It had a couple of exploits which we identified, and so we identified some of these exploits. We made some suggestions to improve the architecture of the stake pool. We made some pushes to upstream on Solana, and then eventually in August we launched on testnet, and then in September we launched on mainnet. And we weren't expecting the response that it did, but one thing led to another, and now we're all here. Yeah.
Yeah, that's an awesome journey. Awesome journey. A question on the regarding the team. Are you guys anonymous? Are you maintaining your anonymity, or you're fully doxed? You're happy to smile in front of a camera and represent Socean?
I think some of us are doxed and some of us are not. I personally, I'm sort of like soft docs or like semi-anon. I mean, like obviously when we raise funds, like all the VCs know me, and I know quite a few of the founders, for instance, for Ribbon, and Phantom, I know them either in person or online, so they know who I am. But actually, it was sort of like, one of the founders gave me an advice, which is that you should do anon, not because sort of anything is going to happen to you legally or whatever, but just because it's more fun. And I mean, I don't have a strong opinion on it yet, but I guess this is like a one-way function, right? If you're anon, you can always come out, but once you come out, you can't go back. So I'm just trying this right now and seeing how it is. But
that's a really good
team,
answer. Very well thought.
Yeah,
very well thought. Because I doxed myself from day one, and there's no coming back.
Yeah. I mean, but everybody loves you, so I think no problem.
Thank you so much. Thank you so much. Let's get into Socean and the main platform and your amazing financial products. But let's make an introduction first for those that came unprepared, that did not read the documentation we handed out. So what is Socean Finance? What's the short pitch, the elevator pitch?
Right. So Socean Finance used to be just a stake pool, right? And that was our product, a liquid staking solution, right? That's the flagship product. And the pitch is that you put in your SOL, right? And we help you stake it. Now, staking is very important, not just to earn APY, but also to help to secure the Solana network, right? But the problem is it's very difficult to stake on yourself by yourself, and also there's a lockup period when staking and unstaking. And so the way it works is that we sort of try do it for you, and we give you a liquid staking token called SCN Sol, and then you can enjoy the freedom, which allows you to stake and get your returns, as well as have the freedom to sort of cash in and cash out at any time, as well as participate in the rest of DeFi. So that's sort of like Socean in a nutshell. But as we build, we realize that there are lots of other things that we want to build as well that that dovetail well with what Solana needs, what Socean needs, and we're building all these new products to help the ecosystem as well as other protocols. So one of the other products that we're building out, or that we've built out, is Socean Streams, and sort of Grape. We're very lucky to have Grape as one of our partners. So yeah, I mean, it's hard to say what Socean is, but I think our goal is really to build up the Solana ecosystem and build positive sum products that help the ecosystem as well as help our partners. Yep.
Awesome. You're very well versed, man. I'm impressed. But let's take the products one by one. Let's start from the staking solution. How do you choose the validators, and how does that work? Just give us a quick summary for us to understand how is that promoting decentralization and no decentralization, and how does that push the narrative a little bit better? How does Socean contribute into that?
Yep. So I think a lot of criticism that is levied upon Solana is that it's very centralized, right? It's this chain where sort of like, there are lots of whales, there's lots of VCs, and this is like criticism that's often, made. And part of the reason is because if you look at the distribution of stake, so the way, Solana is a proof of stake blockchain, right? And the way that, what that means is that, people who stake their SOL get to vote on the next block, all right? And that's how like the network is secure, because stakers then get to vote on the next block, and then the blockchain does block by block. Now the problem is that 20 validators, or something like 19 or 20 or 21, it fluctuates day by day, but about 20 validators control more than 33% of the total stake. So what that means is that if these 20 validators ever got together, right, they could cause the Solana network to halt entirely, right? And obviously that means the blockchain would completely go down, right? What's worse is that apart from just 20 validators, only 3 data centers, individual data centers, and data centers are basically like huge sort of like huge rooms or like warehouses somewhere where there are lots of servers and stuff. But if 3 data centers ever went down, then the Solana network could come to a complete halt. So for us, when all of us who hold Solana, we have a vested interest in making sure that Solana blockchain doesn't fall if only 20 validators sort of go down or collude or whatever reason. So that's why we need to stake to validators which are called outside the group, outside the top 20. Right. And furthermore, we need to make sure that we distribute our stake not just to one or two validators, but to lots of different validators, right? And this is the way in which we make sure that the Solana network is sufficiently decentralized. So that's what we mean by, when you stake with a stake pool, you're helping to decentralize the network, and you're also making returns, right? So that's the first part.
You're choosing smaller scale validators that are outside the main the main network of data centers. What are the criteria to choose those validators, to pick those and add them into the possible validators that you'll be selecting to stake the Solana that the protocol gathers?
That's a good question. So there are over 1,000 validators in Solana, and not staking with the top 20 or like the people in the top data centers still leaves like hundreds of other validators that you could conceivably stake with. And so the way in which we do it right now is that we just look at the sort of like the average performance over time of these validators, and we delegate sort of equally towards all of them. However, this is only like our first step. So what we've been doing is that I have been actually sort of recording validated performance every 15 minutes for like the past like 6 months, right? And we're sort of back testing this strategy. Now, being an economist, I actually went to derive sort of like the optimal equation in which you can use to sort of delegate stake to validators, and that white paper is on our documents, docs.socean.fi. But we haven't implemented that one yet, because number one, it's a little bit complicated, and number two, I still want to collect some more data, right? But eventually, right, what we want to do is we want to strike the right balance between performance, which is delegating to the best validators, as well as decentralization, which is delegating to many different validators. And this is how, and the equation that we derive helps to fix that exact trade-off in a parameterizable way, which means that people can vote on the parameter and they can decide how much they care.
And this is all this voting is happening, is planned to happen with the governance token you'll be launching, which again, this is a parenthesis, we'll touch upon the token on the second half of our AMA. But just to connect the dots.
Yeah, that's exactly right. So people with the Socean token, which is coming soon, will be able to vote not just not on lots of stuff, but also as well as where they want their stake to go. And we think that's very important.
Awesome. I can't wait to get to that part of the AMA and ask for some alpha. But let's go back to the staking solution. How is Socean different from Marinade and Parrot? Marinade with MSol and Parrot with PSol. I assume you're direct competitors in the liquid staking arena.
In a way, I mean, we're all building a stake pool, right? And sort of different people have different strategies. So, for example, Lido, for example, is one of the big players in Solana as well, and they have a little bit more of a I would say nepotistic way in which they choose validators. So they have a white list of validators, and they pick you have to make an application and so on, and they force you to sort of set like particular fees, like 10%. And the reason they do this is because they own one of the largest validators in the space, and they don't want to sort of undercut their own validator, right? So that's a little bit of, their argument is that these validators have a track record, they have long safety and blah blah blah. You can decide if you believe that or not. But sort of different stake pools have different ways of delegating to validators. That's the first part, right? And of course, the way in which we delegate to validators and the way in which we charge fees will determine our fees, will determine our returns. And if you look at our returns, we've consistently outperformed Marinade as well as Lido, right? For Parrot, I think they have higher APYs, but I think I think like half of their stake is delegated to their own sort of Parrot validator or like two validators or something like that. So we don't think that is a good that's a good delegation strategy. That being said, right, however, I don't want to sort of shit on the other stake pools. I think all like stake pools are important, and it's important to have more than one, right? Because if for example one stake pool controls all of the stake in Solana, then there is a risk too to that particular stake pool. And so I think there is space for multiple stake pools, and like a healthy competition, a healthy ecosystem helps to drive prices down so that consumers benefit as well. So I think that's the first thing I would say. The second thing I would say is that we are very early stage. So in between all of us, right? Marinade is the largest, and I think we are we are smaller, but in between all of us combined, I think less than 10% of Solana stake sold is in stake pools. So there's still a lot of room.
There's a lot of room for
exactly.
There's a lot of market to be captured. Amazing.
Exactly.
And I totally agree on the positive effects of healthy competition. I totally agree. You guys are the rising tide that helps all boats. Helps rise all boats. I'm very, very happy, and I love the way you stated the answer. Congratulations on that tool. I'm personally staking with you guys, hoping for some NFT. Some NFT strategy as a reward for my early staking.
So Chris, I will say, I mean that we don't plan as you know, I think we don't plan to be just a stake pool, and we plan to launch different products. But I think for every product that we launch, we're gonna figure out how does this tie in to the stake pool, right? And how does this help to drive volume to our flagship product? And I think one of the things that is really exciting to me is that right now stake pools are worse by definition than the top performing validator, right? Because we sort of delegate to like a lot of different validators, and obviously we'll take the average returns from all of them, plus we take a little bit of a fee. Now, but is there a way for a stake pool, to give additional yields such that staking with a stake pool is strictly better than staking to any single validator, right? If there's a way we can sort of like, weaponize the yields or do some sort of strategy. And I'm actually really excited, but I can't talk about it at this point. But I think the goal is that we can give you guys give people who stake with Socean the highest possible, like superhuman, staking returns than staking with any single individual validator. And when that happens, I believe that from 10%, we're going to go to 100%. Yeah.
Wow, that's amazing. That's amazing, and it's full of alpha. So yeah, guys, keep some notes. Thank you so much, FP. So just to wrap up the liquid staking solution, which are the DeFi protocols that at the moment we can use our SCN Sol, the staked Sol in the protocol? Tell us a little bit about your partners, the DeFi partners, the protocol level partners.
Right. So I think the first ones to come up were the AMMs. So we're on the biggest ones. We're on Saber. We're on Orca. Right. We're on Radium as well, and we're on Atrix. So there is liquidity on SCN Sol to Sol, and you can sort of provide liquidity if you want to. You can farm yields there. Right. One of the protocols that we've recently integrated with is Solan. Right. And Solan is super interesting because there is that sort of, it unlocks the leverage staking strategy. And I'll just quickly go into the leverage staking strategy. The idea is that you put sort of SCN Sol into Solan, right? You use that Socean Sol to borrow Sol. You put that Sol into the stake pool again, and you get Socean Sol, and you can repeat this. And what you can do is that as long as the borrow rate of Sol is less than the staking rewards of SCN Sol, which it is right now, in fact, you're getting paid to borrow Sol on Solan, right? So this allows you basically to sort of stack staking returns with only like an initial capital, and you can get sort of like 4 times, 3 times or 4x returns or staking returns, and that's really an exciting DeFi strategy for us.
Wow, thank you for this one. That's a strategy we can definitely explore on one of my streams and do it on camera. We've done those things in the past, and it ends up being a way to leverage your position on staking on the staking rewards.
Yeah, exactly. I mean, happy to do that. It's quite an exciting strategy, and we wish more people would figure it out, because right now it's quite lucrative. Yeah.
Awesome. Let's talk a little bit about NFTs, your NFT, the Pathfinder NFTs, and all those placeholder boxes that you have on your platform, where I assume it's going to be populated with other NFTs. So what can you tell us about? What is the Pathfinder NFTs? How was it awarded? And what's the plan with it?
Yep, that's a great question. I think this is quite a hot question on the community. So I give a background about the Pathfinder NFTs. We dropped these Pathfinders, we airdropped these Pathfinders like a long time ago to our first sort of 3,000 users, and now we have like, I don't know how many more users we have, but we gave Pathfinders to the first 3,000 users. The Pathfinders, there are 5 tiers of Pathfinders. So there's a tier 1 to tier 5, and tier 5 is the rarest. Tier 5 was awarded to the first 10 stakers. First 10 stakers that are not our team, I should say. The team holds 1, but the rest of the 9 are given to people who are not us. And then like there's 4 and 3 and 2 and 1, right? But these sort of 3,000 Pathfinders are basically to they have they weren't intended to have any monetary value, but they were just there to show our appreciation for our first users. We didn't sell them, we didn't mint them, we didn't even announce them, we just gave them out quietly, right? And I think so as to what role will they play in the future plans, I cannot comment. But I'm sure this will be sort of cleared up pretty shortly. Yeah.
Yeah. Okay. Thank you. I understand why you can't announce things, and I obviously understand what your silence means, and yeah, looking forward to learn more about them in a future announcement.
Absolutely. So one more thing about NFTs. Sorry, go on.
Every product that is launching on the Socean platform is going to have an associated NFT. What are those coming soon boxes for?
Exactly. So I think the way so again, we don't plan ever to sort of like sell NFTs. But these will be sort of like NFTs we plan for future sort of like marketing. When we launch something with a new partner, we want to give these out as rewards. We also want to give these out to incentivize like communities to do things that we want. So for example, if you're very sort of active on the Discord and you're writing sort of very thoughtful and high level posts, we want to award that to you, something like almost like a reputation. Like these NFTs, again, like we don't expect them to be like speculative. We don't, we also don't encourage people to sort of flip them. But the idea is really that we want to sort of like reward partners as well as reward people who contribute to our protocol. That's the idea.
Yeah, love it, and looking forward to the new NFTs. I think the art is really pretty. I also owned one. I was awarded one. So yeah, I hope to get the NFTs that should be releasing slowly. But
yeah,
from what I understand, you are not going to be a major player in the NFTs. It's going mostly to be some exclusivity feeling to your core supporters and community members. So you're not planning on some crazy NFT tool or service or something like that.
I mean, so never say never, but I mean, if the question is something like, oh, are you guys going to be like Genesis Go and the NFTs will mint the tokens? Yeah, the answer is no. We don't plan to do that. Yeah.
Okay, nice. Now let's go to the big hot news, Socean Streams. Can you tell us a little bit about the Socean Streams and the main philosophy, vision of the product? And of course, a little bit more details about when the launch is gonna happen and some of the partners that you have already onboarded or you're planning to launch with, other than Grape. I mean, we are all familiar with Grape. But yeah, let's start from the beginning. What are Socean Streams and what's the philosophy behind it?
Absolutely. So what is Socean Streams, right? So for buyers, it's a way. It's a way for you to, if you believe in the protocol for the long term and you want to support it, you can basically buy a bond contract of these tokens, right? That vest linearly over a duration, and in return you can get a discount for doing so. So for buyers, it's a way to sort of like make sort of long-term bets on a protocol that you support and get a better price than buying on the open market. So it allows you to long over time, but in a smarter way. And for protocols, it is a way to sell your governance token, number one, to the right people, Number two, at the right price because it's an auction, right? And number three, in a way that doesn't flood your supply, right, and cause your token price to drop, which doesn't help anybody, right? And so what I mean by that is that when a protocol sells its token, right, of course it increases the supply, right? And of course when you talk about supply and demand, if you increase the supply, the price tends to fall. So when you sell streams, you are selling a stream of future token, right? Or like these tokens unlock over time. And what that means is that you are able to control the token inflation rate, right? Which is much healthier for sort of like this the supply inflation of the token, right? What's more, when you do Socean Streams, you are basically selling it like as a bond, right, as a stream, and people who are short term are going to look at this as like, I don't know if I'm not bullish on this, and they will go away. So what protocols get is that they are able to select between people who are more long term bullish on the token, right, and people who are more like short term flippers are not interested. So protocols are able to use streams to specifically sell to the people that we long term holders of the token. So that's what Socean Streams is, right?
This is very similar to a protocol-owned liquidity model. Am I right on this one?
Yes, that is correct. So what protocols do is they can sell their tokens for any SPL token, right? And a lot of protocols choose to sell it for liquidity for LP tokens, right? But of course, this is not limited to LP tokens alone. For example, you could use streams as an airdrop, right? If you want to airdrop tokens, but you don't want them to airdrop them right away, you can airdrop them over a year in a way, and you can use streams to do that, right? If you want to implement some sort of vesting schedule, you can do that as well. If you want to sell your tokens not necessarily for LP, like not to own your own liquidity, but just for USDC, right, as a sort of like alternative fair sale, you can do that as well. So really, Socean Streams is quite flexible in the things that you can do. Yeah.
Oh, really nice, really nice. But the way you've seen the market at the moment, and from the projects that have approached you or you've approached, what's the trend? Do projects actually prefer to sell their streams for LP tokens, or do they opt in for stable coins or less risky assets such as Solana or Wrapped BTC? How does it work? What's the trend in the market?
Mm-hmm. Yeah, so Grape was our first partner, and we're really, really grateful for that. There are other partners that we've really locked in, and we will announce them like very, very soon, like over the next few days. I think the question is like, do people buy LPs or do they use them for other purposes? I think it's a bit of both, right? Of course, protocol-owned liquidity is a really powerful sort of asset for the protocol, right? So we do see like the majority of protocols use POL, but a lot of protocols are choosing to do both, which is that, okay, we want to do this airdrop, right? And we'll use Socean Stream to do it. Plus, right, we are also going to sell these our tokens as a stream, in return for LP to sort of get that initial liquidity for our governance token. So we really do have protocols trying to use more and more of Socean Streams, and that's something I'm really happy with.
So the way I understand it, this is a product really close to what Invictus has launched with Invictus Flare. Are there differences in the mechanism of the, they call it bonds, but it's not really bonds because it has no nobody is borrowing anything, there is no lending and borrowing, so it's not really bonds. Yeah, I think Streams is a more accurate name, but I think they're doing something very, very similar. How are the products different?
That is correct. So you are right that it's very similar to sort of Olympus Pro on Solana, Olympus Pro on Ethereum, Invictus Flare on Solana. I think that there are two main differences, and I would say the first difference is philosophical, right? Which is that Olympus and Invictus, right? Fundamentally, they're based on that sort of like decentralized currency. And I really hope that I don't step on too many toes here, but I think it's becoming very clear that Olympus and Olympus folks are all Ponzi's, right? And no amount of sort of 3 or whatever can sort of cover that up, right? So and really why why did they build this out, right? They built this bonding product as an on-ramp for people to really buy into the Ponzi and sort of capitalize the treasury, right? And so their method of building is completely different. So for example, Olympus Pro started off with 5-day bonds, right, or 7-day bonds or something, very very short duration. And the reason they started off with very short duration bonds is because they had very high, incredibly high, hundreds of thousands of APY staking. And obviously, nobody is going to bond for a long time because you're missing out on those 100% 100,000% APY returns, right? Nobody would ever bond. So that's why they had to make the bond durations very, very small, like 5 days, right? But, right, most protocols, right, protocols like Socean, protocols like Grape, we are not running a Ponzi. We are running, we have a real product, right? And so for us, a 5-day bond is actually completely useless for for any sort of like bonding purpose, right? Like a 5-day bond is basically like almost liquid, right? So really what we are looking for is something like 30-day bonds, 60-day bonds, 90-day bonds, 1-year bonds, right? And that's where you get the benefits of bonds really. And that's where you can reward people who hold long-term, right? So philosophically, we come in very different, right? For Ohm Fox, it really is about more on-ramp for the treasury. And for protocols like us, it really is like, here's a tool for our toolbox to help to capitalize our treasury, right? But we are not interested in running a Ponzi. So I would say that's the first thing, right? And the second thing I would say is that apart from narrative, really, we came in building this product not because we wanted to chase trends or we wanted to follow what the new hotness. It was because there was no such solution on Solana, and that's why and we thought that we needed this, right? And a lot of protocols need this, and that's why we built it out. Right, and I think that's the difference. And technically wise, I think we are also better. I'm not 100% sure about Invictus products, but we offer flexible bond durations plus also like trade the ability to trade these tokens as well in the future. So yeah, we are a little bit more different, and we support a variety of more different tokens that I'm not sure if Invictus Flare supports, but don't quote me on that.
Yeah, and full disclosure here to the audience, I've seen the demo from Socean Streams, and I also agree that you guys are far superior in the experience and in the technical capabilities you offer and the flexibility you offer. So yeah, super impressed. And I have to disclose it that I've seen it and it works and it's beautiful.
Yeah, I mean, you're very kind.
So you cannot really tell us any other partners you've onboarded other than Grape. When should we see the launch of the platform, and when should we expect the announcement of those partnerships?
So you should expect to see announcements over the next week and a launch at the end of the week.
Any well-known projects in Solana? Like you can answer with a yes or a no. You can't really, you don't need to give us names, but any major player that we actually know, there's no way that we wouldn't know.
Yeah, absolutely.
Wow, yes. Nice. Looking forward to that.
Yeah. I mean, but I will say, right, we are of course looking for new partners, right? So if anybody here is interested in using Socean Streams or thinks that a particular protocol is a good fit for Socean Streams, then yeah, please feel free to DM me and reach out. Yeah.
Do you think that this change of narrative in the Olympus Pro models and those Ponzi-like models, to be honest, do you think that the change of narrative and the collapse of the Ohm token is hurting Socean as well, is hurting Socean Streams as well? Or you think that this is not going to have an effect just because of the philosophical differences and some technical differences that you've been implementing?
Yeah, so it's a really good question, and I think the answer is that I think it helps us, right? And the reason is again because sort of like Olympus is coming and Invictus is coming, and all of them, as I said, they start from that point of like we are Ponzi, bonds are just another on ramp for our bonds, for people to buy into the Ponzi. But for us, we came from an entirely different perspective, which is that we want to give out tokens. We want to do an alternative to liquidity mining, right? And we want to do it in a sustainable way. And that's like a completely different sort of ball game. And I think that the collapse of their narrative actually helps us, right? Because we've come at it from a proper protocol level, and they've come in from a Ponzi level, and their collapse means that our narrative will be stronger. Because I mean, don't get me wrong, right? Like it's the idea of selling your tokens over time, like a stream, there's nothing sort of like Ponzi about that. But what you can do is just like a tool, you can use it to prop up your Ponzi, right? And I think that is problematic. And yeah, so I think, right, the fact that we are definitely not that. We're as far from a Ponzi as you can get. I think that just helps our narrative. And I think for protocols that are like, we are here for the long term, we are not a Ponzi, then I think they'll find it very easy to sort of like buy into our narrative and align. I mean, like I think the question to all the protocols is that, do you really want to align yourself if you're here for the long term? Do you really want to align yourself with Olympus or with Invictus, knowing what they are? Right. So yeah, that's the question I would ask the audience.
And I totally see your point of view, and I'm fully on board that using words like bonds, like a reserve token, like what's it called, the risk-free treasury value or whatever, when there is no commitment to defend actually those levels, it is really shady. It really creates an atmosphere of a Ponzi scheme.
Yeah, I agree.
So what's the philosophy of the Socean team as when it comes to open source and auditing your code? And because you've been you've mentioned many financial products that are pretty complicated and maybe new to Solana, so I assume you've built everything from the ground up. Are you planning on releasing any of it to the public? Are they audited? Tell us a little bit about that.
That is correct. So we have been a big believer of open source. So way back in sort of April and May, for example, I think not many people know this, but Lido was so there was a Solana reference implementation of the stake pool, right? And Solana was building on that open source. And Lido had their own version, which they forked off from the reference implementation, and they took it sort of private. And of course, I think Marinate did the same as well. They forked off and they built their own. For us, we decided we don't want to do that. I think the reason why they did that is obviously they wanted to have a comparative advantage. They wanted to be the first to market, which I completely understand. I'm not sort of like saying bad things about them. But for us, we thought it was more important to contribute to the Solana code base, right? So we started sort of just pushing changes to the Solana GitHub. We push changes to upstream and we run we contribute to the Solana code base, right? And like I like to say this, but like almost 25% of the code base, the Solana stake pool code base, was contributed by us. Probably less now because it's a mature product, but yeah. So we've consistently contributed upstream and pushed our changes and improved the stake pool. And a lot of the stake pools that come after, including Parrot stake pool, was built directly on our efforts, right? Like our contributions and of course Solana's contributions as well. So we're a big believer of open source. I think even when it hurts our business case a little bit, but we think it's the right thing to do. That being said, right? So there were also practical advantages to working with Solana, and one of them is that Solana paid for all of the audits. Basically, we did Solana was able to procure 3 different audits from the top firms, right? And audits are so hard to get nowadays. So 3 different independent audits by the Neodime, Kudelski, like all the big names. And yeah, we benefited from those obviously.
Yeah, I have the big names on my screen at the moment from your website. But are we? Do you mean that all the products you've been launching or you will be launching are going to be audited? Or this is something that's going to happen on a second?
Yeah, exactly. So full disclosure. Full disclosure, Socean Streams will be launching and it will not be audited, right? That doesn't mean that nobody has looked at it, right? We've opened up our code base to a lot of our partners. which I can't say right now, but a lot of partners have looked through the code. We've checked something, but for the code, it is not audited. We have audits already sort of like in the works, right? But given how sort of like crowded the audit firms are, we won't be getting an audit so soon. But we have already sort of secured an audit place. Yeah.
Awesome.
Yeah.
Question coming from the audience. I think this is a reoccurring question. I have two questions actually on this part of the AMA. We're gonna go after this to the last part, which we'll talk a little bit about the token, about IDO plans and holder benefits and DAO stuff. But before we go there, I'd like to ask, what's your fees compared to the Invictus model? How are the social, like if a protocol is interested in joining and selling coins through your streams, what do you charge?
Right. So we charge a one-time fee, or we plan to charge a one-time fee on the way in which only a one-time fee when you mint the token. So, for example, when a protocol has let's say Grape, right, and Grape wants to create these Grape streams or Grape bonds, right, and what they'll do is they'll lock up Grape, right, into a vault, right, and in return, we will mint them the bonded Grape, that unlocks over 7 days or 30 days or what have you, and in that place when you mint, right, we will not mint in a one-to-one, but we'll just take a very small fee from that minting. And then after that, all the sort of subsequent auctions and trades and secondary markets and so on, we will never take a fee. So we'll only be on one time a fee on the first minting of the token. And what this means is that for the customer, right, for the protocol pays a fee, but the customer, the people who, users who buy these tokens, they will never pay a fee. They will always get a one-to-one, like 100% ratio, right? And this is our fee model. Yeah.
Awesome. And just for me to understand, is that you're taking the fee on the native coin, or you are going to be requesting to have Socean tokens in their wallet?
So it's going to be native. So as I said, for instance, normally you would use 100 Grape to mint 100 bonded Grape. But in this case, if you were to take, let's say, a 2% fee, then you would take 102 Grape and you mint 100 bonded Grape, and then we would take that 2 Grape and put it in our treasury, right? That being said, like even though it's a fee, we won't sell. We don't plan to sell these tokens. So we plan to hold them so our incentives can be aligned with the communities and the protocols that we do work with.
Yeah, and you should also participate in the governance of those projects that you'll
Absolutely.
be holding tokens for. It's going to create an awesome network of projects. Second question coming from the audience is, what has been harder for the Socean team, onboarding partners or writing all this code from the ground up?
Oh, onboarding for sure. Like not even close.
Because this is a recurring question. Really strong building teams, and I have to say, you guys are superstars when it comes to building. You know what you're doing. Usually say that onboarding is harder, while more marketing oriented and social oriented projects actually talk about how hard coding has been. So that's an awesome answer.
That's interesting.
Let's go now to the final part that has to do with the coin questions, the IDO, the DAO, and the governance. Can you tell us a little bit about the tokenomics, or if there is anything special on the tokenomics you're planning for the Socean tokens? And my next question will be about holder benefits.
Absolutely. These are really good questions. And so for us, we've delayed on launching a token, even though we're one of the quite early projects. And the reason is we wanted to get this right. You only get one shot, and you don't want to fuck it up, basically. I've written extensively about this on our Medium, and I'm sure that Chris will plug it after this. But one of the biggest problems in Solana is that protocols launch with a very, very low initial supply, right? And like 0.3% in their IEO or IDO or whatever, right? And then after that, they just like aggressive, and this is like FOMO, right? Like this artificially restricted supply. Everyone buys in, the coin goes up like crazy, and then it just falls down like 90% fast. And I think the second thing that they do is that they sell to VCs at a low price, and then they sell to retail at a high price. And basically what happens is that, to put it not so nicely, the VCs and the early investors just dump on retail, and this is something that we really, really want to avoid. So I think there are two things in which we do tokenomics differently, right? One is that we are offering a huge supply, up to 16% of the entire token supply in our public sale alone, right? And this is like, I think I don't know if any other project has sold this or will plan to sell this much, right?
Yeah,
and again,
usually they release like 1%, or it's it's between 1 and 2%. It's a marketing event, usually, those ideals. So I totally see what you're saying.
Yeah, I think the other thing is that they will work with exchanges, right? And again, these exchanges will give them like real marketing, and I see why people do it. But like these exchanges, they exchanges work on exchange fees, right? So they benefit from volatility, right? They make money. They don't care whether the token goes up or down. They only care that people are trading it up and down and up and down, right? So in that case, like, so we are not planning to work with any exchanges. Our ideal would be conducted purely on our website. That will be the only place you can do it, right? And so the second thing is that we are selling these tokens at a price that is going to be the same price as the VCs. So I can tell everybody transparently, we sold the tokens at 6 cents to the VC, right? And people will get the chance to buy those tokens at 6 cents, right, at terms better than the VC, which is like a shorter lockup period. And this I can promise, right? And basically, it's like nobody is dumping on anybody, right? It's like everybody is going to get the same price as we sold to everybody. And I think that's the real, like, really, really fair way to go about it.
Yeah, I'm having a hard time to hold my smile on this one. Amazing, man. How did you achieve that? How did you convince VCs to be vested while the public will be investing, while everybody has the same price? Props to that.
So I
didn't know that.
Because I didn't say that public will be investing. I said that I said that it will be a more friendly investing schedule.
Yeah, more friendly, but obviously makes sense. Makes sense. You wouldn't want your portfolio partners to be upset or dumped on, or you need to strike a good balance between those.
Exactly. So another question that you had, Chris, was like, will there be a connection between the profitability of the protocol and the tokens? And the answer is absolutely yes, right? So a lot of protocols, they launch this sort of like governance only token, and they'll be like, profit sharing will come like sometime in the future, and like who knows, right? Where do the fees go? Like nobody knows. And for us, I think this profit sort of like buyback stuff is built in from day one. So we have this mechanism which we call rising tides. And how it works is that we are basically I don't want to go into the details too much here, but basically we have a SOCN Socean USDC pool that is privately owned by the Socean Treasury. And what happens is that when we want to distribute profits, we put in sort of the revenues in terms of USDC right into the LP. And what happens is that when you do that, right, the price of the LP goes up, right? So and this is on day one, right? And what that means is that the protocol Socean is committing to put future revenues into that pool and making sure that the price of the token continues to go up in a long-term and sustainable manner. So that is like from day one. This is what we promise. We don't promise that we are going to do it from day one, but we already have plans for this from day one. Yeah.
That's awesome. So the idea is that the amount being locked into that liquidity pool is going to be connected with the profitability of the protocol.
That's exactly right. So, for example, let's just give a quick example. Let's say there's like 100,000 Socean and 100,000 USDC, and the price of the token is $1, right? So let's say now the token price is the protocol wants to sort of give revenues back to holders. So what it'll do is it'll take like maybe an additional 100,000 USDC, it'll put it right into the private liquidity pool, right? And now there's 100,000 Socean tokens and 200,000 USDC, right? So what that means is now the protocol is saying, I'll buy all of your tokens, right, at $2, right? And of course, this is almost like kind of like a buyback. So if you think that it's like, I want to take profit now, then you sell your tokens back to the LP. You sell your Socean to the LP, and you can get a $2 price. And obviously, as we keep putting USDC in, right, the price of Socean will keep going up, and that's the way in which we plan to distribute profits to the token holders.
That's pretty cool. And just because it's on a different coin, it's in the LP. You can't really be accused of distributing profits like shares. So you wouldn't be classified as like, now I'm thinking a little bit out loud, but you can't be classified as an unregistered security because you are giving the revenue in a different coin, right?
I'm not a lawyer, but I think there might
Good
be sort
answer.
of like
That's the best
more
answer.
favorable tax implications for some members of the public. Yeah.
Awesome, awesome stuff. Honestly, lots of alpha, and I'm super thankful, and I'm thanking you on behalf of the audience as well. So, in your eyes, who's the ideal holder of the Socean token?
Yeah. So we are really not interested in sort of like short-term gains. The ideal holder of the Socean token is someone who believes in our long-term narrative, right? Who believes in our long-term vision and is willing to hold it, for years to come. Just like the VCs, the partners that we chose, actually, right? Like I think that's because that's the most aligned. And I think for people who are looking for like a 10x at IDO, and then like that's not going to happen. I can promise you that. And like you should look elsewhere for your sort of like quick alpha, right? So that I would say is the ideal holder of the Socean token. Not just someone long term, but also someone who's willing to contribute over the long term. Someone who we've had awesome community members who come in and send like really nice articles or give really useful comments, and I really want these people to be the holders of Socean, not people who are interested in like a flip, like a pump and dump sort of thing. Yeah.
But is also part of your ideal holder, let's say, a group of people maintaining a Solana validator? Is there a use for them to hold a large amount of Socean tokens in order to be able to participate in the governance?
That is a very good question. So it will not be possible for validators to hold the Socean token to bribe the algorithm, right? This is like, they talk about like saber bribing, right?
Man. Thank you.
Yeah, so it will not be. I think that would completely, it would just destroy the integrity of the Socean stake pool. The whole idea of the Socean stake pool is it's democratic, right? It delegates to the best validators, right? It doesn't delegate to. It's not like an LP, right? It's like there's no moral there, but here it is a little bit different. So there will be no bribing, but right, you can tweak the sort of like the parameters of the function, and this may affect. It may affect which validators it delegates to, but not in a way like you can directly control, like, oh, I delegate this to validator number 1 or something like that. Yeah.
Awesome. Now going to the governance side of things, are you going to use any of the existing governance engines, like the Realms from Solana or Tribeca from the Saber crew? Are you going down that path? What's the plan on the governance side of things?
Yeah. So that's a good question. Actually, we wrote this in our tokenomics articles as well. But basically, Mango DAO was the first one to use like the Solana sort of realms, and we were actually the second. So if you look at the Realms Explorer, like Socean is right there. So we started the DAO, like ages ago, even before any talk of the IDO. So the answer is yes, we will be governed by a DAO, right? And we will be using SPL Realms. We will not be using Tribeca. I think not because there's anything particularly wrong with Tribeca, but like Realms came first, and I can see I know the developer of Realms very well, Sebastian, and I know he's really good. But yeah, I'm sure Tribeca is great as well.
Yeah, love the answer. Grape is as well using Realms. Shout out to Sebastian, of course. He's a superstar, fantastic, crazy good builder, and really devoted to what he's doing. I have on my screen here the Socean DAO on Realms. I see you have over $100,000 in the treasury. Pretty awesome. Active DAO. Love it.
Thank you. Yeah. So at the moment we use that internally because like obviously we haven't done an IDO. So the DAO is controlled by a multi-sig that is controlled by the team. But of course this will eventually be opened up when we do our public sale. Yeah.
I did not even congratulate you on the awesome 5.75 million raise that you did. I'm sorry for that. I should have done that in the beginning of our AMA. But can you tell us maybe a little bit about your partners or some portfolio synergies that you are excited to explore that actually were born from that raise?
Yeah, absolutely.
You can decline answering any of my questions, and I'll understand.
No. Not this is not a problem. First of all, thank you very much. Yeah, I mean, raising is really hard, guys. And I hated it because it took time away from building. I mean, money's nice and everything. But yeah, it was quite tiring, and I'm glad to have gotten it done so we can focus on building. So that's the first thing I would say. I think the second thing I would say is that I think a lot of people say like, oh, VCs are bad, blah blah blah, and I think the that's not quite right. I think the answer is that VCs are as bad as you allow them to be, right? So I think a lot of protocols, they take VC money and then they sort of like roll over and sort of like do whatever the VCs tell them to do. And for me, I was very firm. I was like, hey, if you want to buy in, you have to make sure, you have to believe that, we're going to give people a better price, a better vesting schedule. And they were like, okay, right. And that's where, the people who said, like, it was like, I don't want, I want my tokens now, blah, blah, blah. Some VCs were like not super keen, and then those we didn't take. And some VCs were like, yeah, absolutely, we're going to hold your token, blah, blah. We have no problem with that. Love the idea, and those are the VCs that we took. So VCs are not all bad, right? It's just like you have to be firm with that. So and I want to say that a lot of VCs have been very helpful. I think picking the right VCs is very important. And no, I don't want to name names in a bad way here, but some VCs have been very helpful and some VCs have been not so helpful. But I want to give a special shout out, I think, to our lead investor, Dragonfly. They asked for a big check, and I was thinking, like, should I give it to them? And I gave it to them, and yeah, they've been really, really good. Sequoia, we raised from Sequoia, India. Yeah, those guys are super good as well. They've been really proactive, really helpful. Yeah, and also MGNR and CMS as well. Yeah, but yeah, lots of VCs have been very helpful, and I'm very, very happy with most of the people that I took money from. Yeah.
Really big names, awesome, and you put it very well. VCs can be as bad as you allow them to be, and there is a lot to gain through the portfolio synergies that are presented if you actually have a successful raise with the right partners. That's why lately everybody's avoiding syndicates and no value adding partners.
Yeah, I think it's super important. Yeah. Oh no, go on.
Let's we've already gone quite a lot of overboard in time. Like, we are almost at the 1 hour mark, but I'm enjoying this so much, and I still have a couple more questions. And my next question is about the IDO. Can you give us a little bit, maybe the timeline of events? When should we expect things, or what other in between steps do you need to take? And is there going to be a whitelisting mechanic? How can we participate? And any details you can reveal to us would be super good.
Yeah, sure. So I don't want to promise like too much, and I think the reason why we held off on announcing a date, and I'm glad we did, is because like immediately after we announced the second post, there was this huge market sort of upset, and yeah. So again, don't take this as like a promise. But we are hoping to launch IDO by the end of this month. But again, like, this is strictly off the record. Yeah, and don't expect this to be sort of like gospel. In terms of like, so the second question was, how can we get whitelisted? So there will be a whitelist, right? Because as I said, so sort of like supporters and people who have consistently contributed to Socean will be allowed to buy price, will be allowed allocation at the same price at VC's got with a better vesting schedule, right? This is and how do you do that? I don't know. I mean, I know, but I won't tell you.
Awesome. But I'll give an idea to the people. Maybe join your Discord and participate in your community.
Yeah, I mean that would be a start. Yeah, for sure.
Yeah, just get involved, guys. Really get your hands dirty, and you'll get you'll find your path. It's a good name for the Pathfinder NFT. You'll find your path. Here you go. Connect the dots, guys.
Well, yeah, no comment. But yeah, I mean, how to participate? As I said, we won't be working with like exchanges, blah blah. So really, all you need to do is that there will be an IDO page set up on like the Socean website, and basically that would be the place in which you can do it. If you're on the whitelist, there will be a 48-hour time period before where you can sort of like purchase the tokens at the price that I mentioned. If you're not on the whitelist, then you can participate in like the auction that comes after. And this auction, it has a price floor and a price ceiling, right? So you will not pay more than 30 cents for the token, right? So it is not an auction whereby the price can go like super high, right? Once the price reaches 30 cents, then the auction will close. Yeah. So the reason why we wanted to do that is because emotions can run high with an IDO, and to be honest, I don't believe that we are a billion-dollar company right now. So I don't want people to get burned, and that's why I put the cap at something I think is like it's still pretty high, but I think it's reasonable. Yeah.
Awesome. You've answered all my questions. I'm seeing one question from the audience is: are you going to participate in any of the upcoming events, Solana events, anywhere in the world that we can come and meet you in person, or any of the hackathons that you might be appearing?
Absolutely. So a few of us will be at Seattle, the hackathon coming up very soon, and a few of us will be at Singapore hackathon as well. Oh shit! Is the Singapore hackathon announced? I'm not sure if I can say that.
All right. Thank you for that.
Yeah. sorry, Solana.
I know
but
what
we'll
you're
be there.
about.
Yeah, we'll be at Seattle
tweeted
and we'll be at
about it.
Singapore. Yeah. Yeah, we'll be at the hackathons. Just so come over and say hi. Yeah.
Awesome. I look forward on meeting you in person. I think you covered every single point in the community sourced questions. I don't see any pending questions from the audience. If you have anything to say to the stages, we have over 150 people watching us live. Thank you, internet friends, for being here. So if you have anything to announce, I think it's time. The floor is yours. And after that, we should wrap it up.
Yeah, I mean, thanks everybody for listening. I will be here and around the Discord, so please feel free to ask any questions in the Socean Discord anytime, or DM me, right? As I said, if you think there's a partnership, anything that would be interesting to us or to Socean, or you want to work with us, anytime, please, my DMs are always open. That's the first thing. The second thing is that I want to say a big thank you to Chris and Grape. They were the ones that believed in us, and they were our first partners to sign up with Socean Streams. They really bought into our narrative, and we want to support Grape and the community as much as we can. So we really hope that the upcoming launch of Socean Streams on the 7th is going to be something that will knock your socks off and blow you guys away. We've been working really hard on it with Chris and the Grape team, and we hope you like it. The last thing I will say is that our IDO is coming soon, and I mean, if you believe in Socean, if you're a long-term believer, then we would really appreciate your support. Yeah.
Awesome stuff. Awesome. I've guys, for those listening on the Discord stage, you can hop on the live questions where you'll find a link to the problem with existing tokenomics. I think this is the article you were referring to earlier when you said that you've written extensively about tokenomics issues. So please go read that, guys, and you'll find more documentation in the various channels. Additionally, 5 people from the audience have been taking screenshots of the audience are going to win 100 Grape each. I'll be announcing the winners of the raffle later this weekend. So at the end of the week, together with the raffle winners from the previous AMAs. Again, thank you so much to Socean, to FP, to all the people that made this possible. To the 150 plus viewers across YouTube, media, and Twitch, and of course the Discord stage, who at the moment has 111 people. So super thank you for that. I see that the market is hyped and it is appreciating all these beautiful things that the Socean team has been building. And we hope and we wish you every success. I think you are doing an amazing job.
Yeah, thank you very much, Chris, and thank you very much for having us on.
And we're gonna talk again on the 7th of February. Isn't that right, FP? On Twitter Spaces.
That's right.
And we're gonna extensively explore the POL model, its philosophy, and its implications.
Yep, that's right. It'll be a deep dive onto Socean Streams, or what Grape is using Socean Streams for, what other partners are using Socean Streams for, and why it makes sense for both protocols and sort of users of these protocols to use Socean Streams. Yeah.
All right. one of the longer AMAs, but one of the juiciest AMAs. Thank you, FP. Thank you, Socean team. Thank you, internet friends. And see you soon. Take care, everybody.